Oftentimes, when we get these kind of announcements of workforce cuts, the stock actually pops. In this case, are investors perhaps expecting that this is a bad sign for Tesla's planning? It seems like Tesla is doing a normal automaker thing, which is not what we're used to seeing necessarily from Elon Musk lately.
No, not at all. I think that the letter clearly indicated that he's concerned about demand, how sustainable that is going into this year, because the market is very limited to high-end vehicles. So clearly, in my mind, they have an issue with demand. What we've been indicating to investors consistently over the past several months is that if you do the math and you look at the lead times across the different versions of the models, and you look at the deliveries, and you look at the reservation list of 420,000 or so, you have to conclude that 90% of the reservations that have been built up over the last couple of years are folks that are wanted the standard battery version of the vehicle, which is $35,000. If you look at the Q4 update, they indicated that more than 75% of the new orders came from new customers rather than the existing reservation list, of which they're almost all limited to mid to high price variants. So more than 75% came from new people, not the existing reservation list, and they're almost all mid to high end. So the issue that we have is if once the credit starts to expire, and we go into Q1 and we go into Q2, and they cannot produce the cheaper version of the vehicle in time, do we start to see a pickup in cancellations?
Okay, makes sense. But Steve, Tesla seems to have called this correctly, at least in the segment of the market they're targeting. We're seeing, Cadillac is now the lead, electronic vehicle brand for its parent. Is that necessarily a bad thing? The Model 3 still seems to be doing quite well.
Well, the Model 3 has just posted historic numbers. But let's take a step back for a minute. What most consumers don't realize is that every automaker in virtually every country in the world is moving all electric, and Tesla's, frankly, in the pole position. They're winning. The challenge now is, after they have really won the high-end market in the U.S., is how quickly can they go international? And I think they're very well positioned to do that, already moving forward with a plant in China. And how quickly can they get to that mass market $35,000 vehicle with a 200 or 250 mile range? I think Tesla's going to win that race. Mr. Musk surprised Wall Street by posting a profitable quarter in Q3. I think he wants to do that in the future while he takes costs down. He's doing a little bit of right sizing, but the fact is he's moving faster than anybody else. He's going global faster than anybody else. And today, Tesla is essentially the iPhone of the electric car market. I think he's going to end up looking smart.
If I could just address that, one particular issue. If you look at the website, the lead times for the standard battery, the $35,000 version that is being referenced, still says 4 to 6 months. Now, they have built this reservation list for over 2 years. And if we assume that a large percentage or overwhelming percentage of those folks are for individuals who wanted the standard version, then with no sight in terms of when that car is going to be available, it's very hard to make the conclusion that that car is going to be available and they're going to penetrate into the low end. And secondly, the profit that they've made, which was 4% roughly, and will be less in Q4, was based on selling high-end version vehicles with extremely high gross margins of the Model 3. Now, again, that will clearly change as they start to roll out cheaper versions with lower margin profile. So I think there's a lot of risk to the name, given the level of valuation that we see in this name, given the level of debt that the company has, and given the level of competition that will be entering into the market this year and next year.
May I disagree with that?
Okay, go ahead.
There are 3 things I think he left out. First, Mr. Musk did something that's very smart. He brought battery production in-house that gives him an enormous cost advantage over competition. 2, each quarter, Tesla has taken the cost of lithium-ion batteries down. That is what enables them to bring lower-cost cars into the market. 3, they're showing efficiencies in production that no one anticipated in Q3. I believe they're going to continue that. The simple fact is Tesla's just moving a little faster than the others. Other major companies like Audi are moving very quickly to catch up, but But most people, as Warren Buffett would say, were caught with their shorts down when the tide went out. Tesla's clearly in the pole position. I think the bigger challenge, longer term, will be the Chinese. But today, if you look at Q3 numbers and Q4 numbers, Tesla's Model 3 is the #1 selling auto unit in the country by dollar volume. I think they're going to continue that.
Before we let you both go, Steve, this news about cost cutting at Tesla coming exactly a week after similar moves were made at SpaceX. Is there anything more broadly to glean here in terms of how Elon Musk is looking at and running his two big companies right now?
I don't think so. I think the headlines are this. He shocked the market by getting to profitability in Q3. He wants to continue to do that while taking the price of the vehicle down. I think that's a smart thing. It's going to require some right sizing. I suspect once he's done that, and if he posts anything close to a profitable quarter in Q4, they may take on additional debt to continue their global expansion. Again, they've essentially won the North American premium market race. The challenge now is to win the mass market and to go international. I think he's preparing the company to do that, and I wouldn't bet against him.